Hello and good morning. My name is Rebecca Beck. I'm the Education Program Assistant here at the North Carolina Center for Nonprofits. Delighted to have you join us today for today's webinar, PPP Forgiveness and CLA Intuition 2.0. Before I introduce our speaker, I just wanted to go over a couple of housekeeping items that we need to attend to before we get started. The first is that this webinar will be recorded and be sent out along with slideshow following this presentation today, so you'll have that to review. And also, if you have questions throughout or at the very end, of course, you can add those in the chat box and we'll triage those as they come in. And then at the end of the session, when it closes, you'll have a survey that will pop up in your browser. If you could complete that for us, we'd greatly appreciate it. And now to provide a brief introduction of our speaker, Michele Pratt is a principal focusing on nonprofit assurance and advisory. She has more than 32 years of experience in public accounting and nonprofit management and has provided audit, accounting, compliance, and consulting services to a variety of nonprofit clients, including social service, member organizations, associations, and foundations. So we're delighted to have Michele here with all of her experience, and she's put together a great presentation for you all. So with that, I'll go ahead and turn it over to you, Michele. You can go ahead and share your screen and get your presentation up. And thanks for being with us today. We appreciate it. Make sure you're off mute. There you go.
Make sure we got that going. We got that. Everybody can see that now?
Yeah, perfect.
Great.
Beautiful.
Great. Well, thank you. Thank you so much. Thank you. Thank you for having me. So we're going to talk about a few fun things today. PPP forgiveness. I think that's top of mind for a lot of organizations, obviously, as everyone continues to work through this trying time. And you know, as I say, trying time, I'm actually, of course, most of us are working remotely. So I'm going to apologize up front if you hear some banging and sawing. We've got some work going on at our house here. So please stay with me, and hopefully we'll get some great information out to you today. So just a disclaimer here, you know, this presentation obviously is meant for educational purposes. We're not, it's not to be construed or relied on for legal advice or to create any relationship between you and CLA. And we suggest you consult legal counsel if you have any questions or concernings regarding your eligibility to participate in the Paycheck Protection Program or any other PPP related issues. This presentation that we've put together is based on guidance that's been provided by the SBA and the Department of Treasury through June 25th, which was the last interim final ruling that was issued. And any additional guidance that comes out, obviously comes out through the Department of Treasury. That website is here listed for you. And it's important to really just continue to look at that for any new updates that come out. So one of the things, more recent things, was the PPP Flexibility Act. And the Flexibility Act came in and was signed in by President Trump on June 5th. And that basically created or added some provisions to the PPP loan program. And many of you know the loan program started out fairly, I'm going to say, straightforward, and then things changed as we went along, and things continue to change. We keep seeing additional guidance coming out, clarification on the program, and we think that's probably going to continue until probably sometime into August. As I said, the last update that we got was June 25th, but we are expecting some additional information to be coming out hopefully very soon as we look for more clarification on some of the items. And I'm referring to some notes, so if you see me looking off a little bit, I'm just looking at a second screen. So I just want to make sure that we're getting all the information to you appropriately. So here's some of the provisions of that Flexibility Act that came in. The first one is a longer spend period. And part of that extends the covered period to a 24-week period. It does allow existing borrowers to retain their 8-week period if they feel that that's appropriate. And we'll get a little bit more into that as we get into the presentation. The second one is a 60% payroll cost threshold. And the interim, so basically what that means is that 60% of the costs would be need to be used for payroll, and 40% could be used for non-payroll. There was an interim final rule that came out on June 10th that clarified that really this will be applied at a proportional forgiveness test. So it's going to be treated the same as the previous 75-25 test for forgiveness limitations, but it's just going to the 60-40 ratio instead. The next one was an increased timeline to request forgiveness and defer payments. Forgiveness has to be requested within 10 months of the end of the covered period. That basically extends the deferral period for forgiveness, that extends the deferral period of your payments until forgiveness is remitted to the lender. If you do not submit the request for forgiveness within the 10 months from the end of the covered period, you would need to start servicing the loan immediately. The next one is a modified FTE requirement. There's a couple of safe harbors that came in on the FTE reduction test. This is where I think the PPP forgiveness calculations to determine what the amount of forgiveness would be really get a little convoluted, and it gets a little bit difficult to follow through. But basically, there was a safe harbor that came in on the FTE reduction test, and that allows you, it basically says that there's not a reduction if you're unable to rehire previous employees, or you're unable to hire similarly qualified employees to fill unfilled positions. And you're also unable to return to a level of business activity due to compliance with OSHA or the CDC or other requirements. So we'll get a little bit more into that as we go through the presentation. The next thing that happened was an extended repayment term for new loans. So any new loans coming in after the June 5th date would basically have a minimum term of 5 years. Prior to that, the PPP loans had a 1-year term. So for borrowers that existed, for loans that existed for borrowers prior to June 5th, you don't automatically get that 5-year extension or that 5-year term limit. You'd basically need to go back to your bank and renegotiate whether they're able to extend those terms for you. And then the last thing here is the option to defer employer portion of Social Security taxes. And again, that's only the employer paid piece of that. It does not include the employee portion of the Social Security tax. So if we start to talk about some PPP basics here, what's eligible for forgiveness? So there's 2 buckets. We've got the payroll costs, as we talked about, and then we've got the non-payroll costs. And as I said, now under the new guidelines, the payroll costs need to comprise 60%, or you need to utilize 60% of the funds for payroll costs, and then 40% for the non-payroll costs. So what are payroll costs, or what is included in the payroll costs? Well, it's going to be your salaries and wages, and that includes any PTO, any sick time, any separation payments, but it is limited to $100,000 annualized. The second piece is group healthcare benefits. Now that does include health insurance, vision insurance, dental insurance, anything along those lines. The third piece is retirement benefits. And then of course you've got the employer portion of your state and local payroll taxes. That's everything that would make up your payroll costs as you think about what you would be able to include for those. Now on the non-payroll cost side, we've got interest on mortgage obligations, rent, and utilities. Now the 24-week period, as I said, this is a change that came in on June 5th. That is available for all loans that came in since the PPP inception. But that is also the only period that you can use if your loan originated after June 5th. In other words, you don't have an option of using either an 8-week period or a 24-week period. You can only use a 24-week period. Now, you can file for loan forgiveness prior to the end of that covered period, but we're waiting some additional guidance from the SBA in terms of what that looks like from an FTE calculation perspective. So more to come on that. If you have an 8-week covered period, or if you choose to have a 8-week covered period, that's only available to you if you had a loan that originated prior to June 5th. So if that's the case, if you had that loan, you have the option to choose either the 8-week period to stay with that 8-week period, or you can change to a 24-week covered period. Now, how does the covered period work? This is really interesting, because when we think about the covered period, it's basically that period of time that we're using to track the costs for forgiveness. So as I said, if you have a loan before June 5th, you have an 8-week period or a 24-week period. If you're after June 5th, you only have a 24-week period. But there is an option to use an alternative covered period. And the alternative covered period is available if you have a biweekly or more frequent payroll period. Here's an example of how that would work. So if you had your loan funded on April 15th, that would be the start of your covered period. If you had if you were staying with the covered period. If you chose, because you had a biweekly or more frequent payroll period, if you chose an alternative payroll covered period, that would start on the first day of your biweekly pay period. That would start your alternative payroll covered period. Now, it extends the same period, whether it's 8 weeks or 24 weeks, as your covered period. And this is only specific to payroll. So here's that, just written a little bit differently here. We've got the biweekly payroll or more frequent. We have a choice to choose the alternative covered period. It gives you a little bit of flexibility in terms of the costs that you're including during your covered period or your alternative covered period in terms of what was paid on or before the next payroll date. So basically what we're saying is we're going to get a full 8 weeks of payroll. Originally, when they came out with some of these standards, they basically said it had to be incurred and paid during the covered period. We've got a little bit more flexibility on that now. So this gives you a little bit of flexibility to include things that were paid before the next scheduled payroll date. As I said, we do have a maximum $100,000 annualized payroll. So if you're using that pay period, it's going to need to be prorated. Now, one of the things that's important to understand is that any non-cash payroll costs, meaning your healthcare, your retirement, and those employer state taxes, still need to be paid during that covered period. So if we think about it from a cash perspective versus an accrual perspective, we have more flexibility on the payroll side, but not so much on the non-cash payroll costs. As I said, there's some limitations on the cash compensation that can be paid. And as we look at the 8-week period, that would basically get us to $15,385. So there will be a cap of that amount for any employee if you're using an 8-week period. If you're using a 24-week period, that cap would be $46,154. And that's basically just by taking the $100,000 maximum that you can utilize and dividing it and multiplying it by the appropriate number of weeks, the 24 out of the 52 weeks. As I said, there is, these are considered non-cash benefits, obviously, the health and retirement costs. These are not subject to the $100,000 limit. So if you've got some highly compensated management people, again, that $15,000 or the $46,000 limit are only related to their compensation. The benefits can get added on top of that because those are not subject to the limit. And again, this is employer contributions only. This does not include employee contributions to health or retirement. Now, we've gotten some questions from a payroll perspective in terms of, we're paying our staff a hazard pay, or we've given them a bonus. Are those eligible? And we believe that those are eligible costs to be included. Now, we're unclear, and again, we're still waiting for some additional guidance, but it's unclear if amounts that are in arrears will be eligible. And that would be, deferred compensation that you have from 2020, or bonuses that you have from 2019 that haven't been paid yet. 2019 retirement plan contributions that haven't been made yet. These are questions that we're still waiting for some additional guidance on. And the same is true on the healthcare benefit side. What about payments that I have for self-insured plans? We're still not sure on whether those would be allowed costs for purposes of the forgiveness calculation or not. But we do know that it does exclude long-term, short-term, and life benefits. Those are not anything that you can claim as part of your calculation for forgiveness. On the non-payroll costs, as I said, it's interest on mortgage obligations, rent, and utilities. Interest on other debt obligations is not what cannot be included for purposes of the forgiveness calculation. And anything that you're claiming for expenditures, for instance, utilities, those would need to be expenditures that have taken place as a result of having contracts that were in place as of 2/15/20. So that's just real important to keep in mind. We've got dates throughout the course of the PPP regulations and different dates for different topics. This particular one, again, the contracts had to be in place as of 2/15/20 to consider these costs eligible for the forgiveness calculation. We have some flexibility to include costs that were incurred during the covered period if they were paid on or before the next regular billing date. So again, originally the regulations said that they had to be incurred and paid during the covered period, and now they're giving us a little bit of flexibility. If it's something that's been incurred during the covered period, but you pay it on or before the next regular billing date, that is something that you can include for purposes of the calculation. At this point, you cannot make any prepayments on future interest on mortgage debt. That will not be included. That is not something that you can include in the calculation for forgiveness. But we're really unclear right now at this point about rent and utilities. And again, the maximum forgiveness amount that you can include for purposes of non-payroll costs is 40%. Now, we do have some, again, we get a lot of questions as we go through and we do these types of presentations. A lot of times, we're going to be honest with you and upfront and just say, we don't know the answer to that question. And a lot of it is because we still don't have guidance. There's instances where you've got related party rent, and whether that's an allowable cost or not, there's still really no guidance on that. Interest on other expenditure on other debt other than mortgages. Right now, we feel that's pretty clear that you're not able to take that as a deduction or as an includable cost for purposes of the calculation. And then we get to utilities, and the question becomes, well, what's includable in utilities? Does it include does transportation, is that includable? Does it include gas? What about telephone? Does that include cell phones? Can I include my garbage and my recycling? We get a lot of questions around this, and we just really don't have a lot of details that have been given to us in terms of guidance from the SBA. So again, a lot of these questions are really unknown at this point. I think on the telephone piece, for the most part, if you have cell phone, again, contracts in place as an organization that were in place with your provider prior to February 15th, those probably can be included. Most of the time, what we see is not from a nonprofit perspective is that agencies have more than enough money to qualify for forgiveness based on their payroll costs. And again, the payroll costs include all of those other pieces that we talked about, and you may have the option, as we talked about, to go to a 24-week period. So hopefully, you know, a lot of the, if you can qualify based on your payroll, a lot of these questions become items that you don't need to really worry about. Now, what you do need to do on the forgiveness side is you need to really go through a lot of calculations to get to the point where you can determine how much am I eligible for forgiveness. And it's based on the lowest of these three calculations. So the first thing you need to do is you need to look at how much did I spend on my allowable costs. And if you look at the forms, that's, and again, this is the loan forgiveness forms. And if anybody needs those, we can certainly get you copies of those, but they're also available on the US Treasury website. But that's the first thing you need to look at. Then you need to look at, did you maintain the wages at least 75% of the prior quarter? Now, when you do that, you have to exclude high earners. And again, there's a schedule that you would have to actually go through and complete as part of the application that would help you understand if you have done this, and again, provides the documentation that you would need to submit with the application. Then the third part on this test one is, did the entity maintain their FTEs? Now, this does not include rehires if you rehired people through 1231. The second calculation is, what is the amount of the PPP loan? And then the third one is the payroll costs for that 60% requirement. So, excuse me, what you do is you have to take and look at the lowest of those three amounts that you calculate. Now, if anybody does have an idle loan, you do the idle loan, typically you received an advance of up to $10,000. Sometimes, depending on when that was approved, you may have received it based on your FTEs. And for smaller organizations, it could have been less than $10,000. But that's part of what you need to look at as well, because that actually comes off of the PPP forgiveness amount. In other words, you don't get a full PPP forgiveness plus get a $10,000 advance from idle. One reduces the other. Now, on the wage reduction test, or I should say, there is a wage reduction test, and that's measured using the average salary or hourly wage. And you look at that for the covered period or the alternative covered period compared to Q1 2020. This only applies to employees that you had during the covered period or the alternative covered period. And again, there's no penalties if you have a rehire. And you don't look at the high wage earners. So it's only for those people that are making less than $100,000. There is a safe harbor if wages are not reduced or were reduced from February 15th to April 26th, but were reinstated by the application date. And there is a forgiveness reduction that applies for the full 24 and 8-week period, regardless of whether the employee was there for the entire period. So it gets, again, this is a very difficult, convoluted sort of calculation, and it's important to really understand a lot that goes with that. One of the things that they were gracious enough to do was to clarify for us what full-time equivalent means. There is a difference between how you looked at a full-time equivalent for purposes of sizing the loan versus how they look at full-time equivalent for purposes of the PPP forgiveness. There's two methods that you have to choose from when looking at full-time equivalents or looking at FTEs. The first is a standard method. And the standard method says that all full-time employees, that means anybody working 40 hours or more, is basically counted as one FTE. On the part-time employees, you would aggregate the number of hours and divide that by 40 to get the appropriate FTE. Now that's calculated for each pay period, and you use the average for the covered period or the alternative covered period. The simplified method is obviously a lot easier. Same thing for the full-time equivalent. If it's 40 plus hours, they're basically one FTE. If it's a part-time employee, you can use 0.5 FTEs. Now that works regardless of the number of hours that they work. Obviously, if you have employees that are working less than 20 hours, and that would comprise a large part of your part-time employees, it may benefit you to use a 0.5 FTE and use that simplified method. However, if you have employees that generally work more than 20 hours, you would obviously probably want to go with a standard method. But that is something that you may want to look at and see what works best for your organization. As I said, there is an FTE reduction calculation that comes into play in terms of the calculation for forgiveness. There is some safe harbors that eliminates the need for the FTE test, and that's based on whether you had, or I should say, here's the qualifying factors for that. If you had no reduction in the number of employees or the average paid hours between January 1st, 2020 and the end of the covered period or the alternative covered period, that's one test. And if you were unable to operate at the same level of business activity compared to the business activity before February 15th. Now, you would need to document the reduction in the business activity during the covered period and show that it stems directly or indirectly from COVID-related requirements. And those requirements could either be guidance that was issued by HHS, CDC, or OSHA. You will need to keep the documentation, as I said, on that, and that is something that you're going to want to also submit with your PPP forgiveness application. And then the last item here is if you had eliminated the average FTE reduction during the period from 2/15 to 4/26 by the application date. So if you had a reduction in your FTEs, but you restored it by the time you apply for forgiveness, then you are also eligible to be under the safe harbor. So in that particular case, there is no FTE reduction, or the FTE reduction does not reduce your loan forgiveness. So if you're not able to hire previous employees and you're unable to hire them similarly qualified employees for unfilled positions, if you're not able to restore any of the reductions in hours because employees rejected the offer, you'd want to have that documentation because that is also something that will not reduce your FTE for loan forgiveness. If employees were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in hours, all of these exceptions will not reduce your loan forgiveness, but you must use the application form 3508 to reflect those exceptions. Now that 3508 is actually the full application for forgiveness, and we'll talk a little bit about the easy form that's available as well. But if you have any of these situations, it's real important that you utilize that form to ensure that you're not getting penalized for having these FTE reductions, because those exceptions will not reduce the loan forgiveness. So as we look at maintaining or not maintaining the FTEs for reduction purposes, again, we look at the FTEs during the covered period, and then we look at the FTEs during the benchmark period. And that benchmark period is the lower of either the FTEs from February 15th to June 30th, or from January 1st to February 29th. You compare those two, and that gives you the reduction before your safe harbor. So this again will impact, if you have a reduction, will impact the amount of PPP forgiveness that you can have. Now, again, if you qualify for one of those safe harbor tests on or before your application date, then you will not have a reduction that gets applied to forgiveness. Now, as I said, for the applications, there is a form 3508. Now, this application is available online along with the instructions. This is a full application. It's several pages. It does take some time to complete it. And as I said, there are additional schedules that need to be completed, such as Schedule A, which is a summary of employees and salaries and so forth. So there is quite a bit that's involved in that. Now, there is also an easy form that's eligible to be used. However, there are certain items that you need to comply with, or certain factors that, whoops, sorry about that, factors that you need to meet in order to utilize that application. The first one is that that you've had no wage reduction greater than 25%. So if you've had a wage reduction, it needs to have been less than 25%, and you had no reduction in the number of employees or the average hours paid from January 1st to the end of the covered period. Again, you would ignore any reductions if you tried to rehire or restore the hours, but you were unable to. The second one is if you had no wage reduction greater than 25%, and you were also unable to operate at the same level of business activity. If you meet those requirements, then you can file the Form EZ. One of the other things that's out there currently, and we're still waiting for some additional guidance on, but there's talk about whether they would allow for an automatic forgiveness for any loans that are at $150,000 and below. Again, we don't know how that's going to come out, but that is something that's being talked about currently. Now, you can submit anytime for your loan forgiveness, and at any time on or before the maturity. It's important to, as I said, the loan forgiveness needs to be applied for within 10 months of the covered period. However, it's important to look at your loan documents as well to see if your bank has established any sort of time frame or requirement in terms of submitting for forgiveness directly with them. As I said, you can submit at any time on or before the maturity of the loan. That includes during the covered period, assuming you have used all the proceeds that you're requesting forgiveness for. Now, there may be some periods of time where you still need to wait to ask for forgiveness because you still need documentation. For example, because of with your payroll, you would need to submit your 941s. If you're asking for forgiveness and putting your application together before the end of a quarter, you're going to need to wait to submit your application until you have your 941 for that quarter. So there may be some timing differences there, and it's important to wait for that and understand what those are. Now, the lenders are still waiting for more instructions from the SBA. So at this point, we're not aware of anybody accepting applications. However, there may be some small banks that are currently doing that, and they're holding those because, again, the lenders have not gotten clear instructions from the SBA in terms of how they need to deal with some of the forgiveness or to go through the calculations. Lenders do have 60 days, however, and the SBA will have 90 days to review the forgiveness applications. And again, once forgiveness is requested, once the forgiveness is remitted to the lender, then you would need to start servicing the loan to the extent that you don't have any forgiveness, or to the extent that you're not fully forgiven on the loan. The SBA also has 6 years to review the loan documents or the forgiveness documents in a greater detail than the 90 days that we just mentioned. And that could have an impact, obviously, on future mergers or acquisitions of organizations to the extent that those exist. So it'll be interesting to see what more develops on that. From the elements of review, they'll look at whether you were eligible to receive the loan or not. Many of you may recall that there was an opportunity from a safe harbor perspective if you felt that you did not meet the eligibility criteria or that you could not certify to the loan requirements, that you were eligible to return, or that you were allowed to return the funds under a safe harbor provision. Now, that ended back in June. So presumably everyone that has a loan is in fact eligible to have received the loan. So they will look at that as part of their review process. They'll also look at the loan amount and the use of the proceeds, and then they'll look at the forgiveness calculations and also the documentation that's being received for that. Now, a lot of what we get is questions on, well, how does this impact my financial statements? And as we think about nonprofit organizations, we know that many of you have June 30th year end, some have a 9/30 year end, and others have a 12/31 year end. So some of you may be going through an audit, some of you are getting ready for your audit, but there may be a difference between fiscal years in terms of when you received your loan and when you're applying for your loan forgiveness. What we do know at this point is that the OMB has indicated that funds received under the PPP loan will not be subject to uniform guidance, single audit requirements, which is great news for a lot of organizations. If you did receive an EIDL loan, that will be subject to uniform guidance, single audit requirements. So it's important to make sure that you're having that communication with your auditor to make sure that they're aware of what funds you may have received for purposes of determining whether you will qualify for single audit or not. Now, a couple of options on how to record the loan. And the first one is recorded as a loan. It's debt. And basically what you would do is you put it on the books as a liability, and you accrue the interest under ASC 470. Now, if you choose not to follow that guidance, you do have the ability to look at guidance under ASC 958, and basically we would look at that and say, well, it's a grant that's expected to be forgiven. Now, because there is a component to forgiveness and you have to qualify for forgiveness, we would look at that as a conditional contribution. So in that case, you'd recognize cash coming in as a refundable advance or as deferred revenue, and then you would reduce your your refundable advance or deferred revenue and recognize any contribution once the conditions for release have been either substantially met or have been explicitly waived. So in other words, once you receive notification of the forgiveness and the forgiveness amount, that's when the contribution would no longer be conditional, and that's when the release into revenue would occur. So the best thing to do, my recommendation, is again, have a communication with your auditor, talk through this with them, make sure that you're on the same page. One of the things that we've seen with a lot of organizations is it's great, I've got my PPP loan and I'm trying to keep up with all the regulations and restrictions and changes in all the requirements for that. But realistically, I still have a business to run and I still have a nonprofit to run, and I still need to ensure that I'm here for the community and we're here for our constituents and so forth. So, as we look at that, we need to think about what does that mean for our organization as we are really leading our organizations in the midst of a crisis, right? We've got an economy that's disrupted. We've got programs that are stopping or closing and opening back up and then having to reclose. We may have a sudden drop off in funding. We're really in an uncertain time frame in terms of when are things going to get back to normal? When are we going to be back to where we were pre-COVID? And what we're looking at is really cash management and cash modeling. And this is something that we recommend for our clients. I think it's real important to not only look at what your current fiscal state is, but realistically think about what are some planning opportunities. How do we pull in and seek solutions as we look across our organization that helps us not only commit to our mission and guide us through that during this disruptive time, but we need to make some really effective choices to make sure we're really following the mission, but really realistically doing it in such a way that we're going to be here long term for the employees, for our community, and our stakeholders. And we have to really adapt and create and innovate as we think about doing that. So one of the things that we look at are really contingency plan considerations. Do we need to think about reductions or delays in spending? And many of you have already started to think about this, but really it's financial modeling. It's really helping you to inform how much do I need to do? When do I need to do it? For how long do I need to do it? there's so many different contingency plan considerations to think about. You may have already started doing this. I think this is something that needs to continue to occur, and it needs to maybe be done with some kind of frequency, whether it's monthly or biweekly. You know, as things continue to ebb and flow, we just need to continue to be able to move with that. So it's reductions and delays in spending. Is it potential hiring delays? Is it reducing or eliminating discretionary benefits? You know, these are hard decisions to make as we think about our employees, but because they are the crux of our organization. But maybe we need to do some across the board temporary compensation reductions. And how does that look? And what does that do for a cash flow perspective? What does it mean for our bottom line? You know, if we can't cut people's pay enough, do we need to think about workforce reductions? You know, it's really having some ability to model these changes over the course of time, but do it in such a way that you can move things around and you can look at it in a fluid sense, and you can make the changes and then look at it with your board, look at it with other people within management, and tweak it. And this is what our model looks like as we do this with clients. We look at, you know, revenue dips. We look at changes to discretionary benefits and potential layoffs. And here's an across the board compensation reduction. But we look at, what does that do to revenue? What does that do to our margins? What does it do to our cash on hand? You know, we want to be able to understand, how does it, what are the projections for us going forward? And how can we tweak some of these items to get back to a point where we feel comfortable and we say, okay, we know we're going to be okay if we can get through this for this period of time. You know, we know that there's some expenses, COVID expenses, that are going to be expensive, right? As we think about PPE for organizations as you're ramping back up. You know, there may be other working capital considerations. We know that contributions maybe have been disrupted during this time. There's so many different scenarios to think about and modeling to think about as we go through and look at the impact of COVID. But it's important to do that, and it's important to do it from a long-term planning perspective. We all realize that, you know, things started back in March, and I don't know if back in March, if we thought we'd still be talking about it in July with not knowing when this was going to end. So just real important, I think, from a standpoint for healthy organizations to be thinking about this kind of modeling and financial scenario planning. There's some resources out there that, you know, obviously we look for updates around the PPP issues on the Treasury website and on the SBA website. We at CLA have a COVID Relief Center section of our website that has information constantly changing, both articles, and also we have biweekly live streams that we're addressing issues with PPP forgiveness in the economy, tax changes. You know, when we think about tax changes, we think sometimes, well, I'm a nonprofit, that doesn't affect me, but it really does, because there's things out there that affect you. Particularly, you know, as we talk about deferral options on some of the taxes and so forth, it's real important to stay abreast of those changes. So I would welcome you to you know, go out, take a look at the website. As I said, we've got a specific COVID Relief Center section there, but we also have other information that you can tap into as well. And then the U.S. Chamber of Commerce, just wanted to leave that there with you as well for coronavirus updates. That's my presentation. So Rebecca, I don't know if we've got some questions.
We do. Thanks so much, Michele. That was really informative. And I love the way that you laid out your slides. It was very, yeah, it was great. Thank you so much. So a question from Steve. We'll start, or let me start actually with Michele, the first one that came in, does the definition of utilities include annual or monthly software fees, or only hard infrastructure like telephone and internet?
Yeah, and that's a great question. And I think, I think right now we would probably err to the side of conservatism and say that it does not. But I think that's something that, realistically, until we have more guidance on, we can't say with any definitive assurance.
Okay, so wait and see.
Wait and see. Yeah.
And then her follow-up question, if you fall into 8-week period but want to use the 24-week period, do you have to file a request with the bank?
You do not. You should not have to do that. You have the option to choose one or the other.
Great.
So again, it's important though to look back at your loan documents to see if there's anything in there around PPP forgiveness application with your bank, within the actual loan document.
Great, thank you. A question from Steve. Our nonprofit owns and manages numerous rental units for low-income clients. Can we include in the non-PR costs the mortgage, interest, and utilities on these properties, or only the interest and utilities on our office building?
Yeah, that's a great question. I'm going to say I do not know the answer to that one, and I hate being the person that says that, but what we have guidance on is interest on mortgage obligations. I would think that would include interest on all mortgage obligations. And I haven't seen anything more definitive than that, but we can certainly follow up, and I can get back to you, Rebecca, and see, whether there's any additional thoughts on that from others within our firm.
Okay, thank you. Follow-up question from Michele, is workers' compensation insurance considered a payroll cost? We get this one a lot.
I'm sorry, what was it? I'm writing down that other question,
okay.
sorry.
Yeah, no worries. Is workers' compensation insurance considered a payroll cost?
That is considered, so your workers' comp is not going to be considered a payroll cost.
Okay. And then a follow-up question from Steve, is the SBA 90 days to review iterative to the lender 60-day review? In other words, what is the maximum number of days it would take to get notification of forgiveness or not from the time the application is submitted?
Yeah, so I think generally speaking, so the bank has 60 days after you've submitted your application. My understanding is that, and again, the lenders don't have guidance yet from SBA, so this is me with my guess on how this would work, but I would assume with the 60 days, you would know at that point. The bank ultimately is, what we've been told is the bank ultimately has responsibility to make the determination on forgiveness. So I would think at that point, after that 60 days, you would know what your forgiveness amount would potentially be. The 90 days that SBA has subsequent to that is to review the applications and fund the lender with the amount of the forgiveness. So presumably you would know, but you're waiting for the actual official notification from the bank that would discharge that amount from the mortgage.
Got it. Thank you. A question from James. If forgiven, will PPP loan proceeds be considered unrelated business income and subject to UBIT?
Yeah, and that's a great question. I don't, I'm gonna preface this by saying I don't know that we've gotten any guidance on that, except that I will say they've been very clear to say that forgiveness is not a taxable, is not going to be taxable income as we think about for-profit businesses. However, their expenditures that go along with that for the for-profit business would also not be deductible. I don't think it's going to be something that would be subject to UBIT at this point. I don't believe that is the case.
Okay. A question from Doris. I had a question pertaining to FTE calculations. We hire interns and pay them for 40 hours a week, but they're only working a 12-week period. I calculated them for our loan as the total number of them divided by 4 because they work quarter of the year. Would this be correct?
That's where you really want to look at, no. So I think what you have to do is really look at the calculation based on, it's based on the 40 hours. So you have to look at it during that covered period for the 40 hours. So if they're working, was it 4 weeks?
Yes.
Okay, so if they're working 4 weeks out of the 80 weeks, I mean, out of the 8 weeks.
Only working a 12-week period.
Oh, they're working a 12-week period. So I guess the question becomes how much of the 12-week period they're working is within the covered period or not. For that particular, in that particular instance, you would want to look at your other part-time employees and whether that simplified method would make sense for them or not. If not, you probably would have some reduction because of the fact that they're only working the 12 weeks. And if only a portion of that is fitting into the covered period, you would need to account for that.
Great. A question from Cheryl. What do you do about PR costs that are covered under specific grants? Do you count those in PPP spending?
Great question, great question. Well, the important thing is you cannot double dip. So there has to be some kind of adjustment that you make for that as you go through the FTE, I mean the calculation for the forgiveness. I think typically what you're going to need to do, and we haven't really seen, again, there hasn't been any guidance on this as it relates to the PPP application. The difficulty with that is when the loans were all sized, it was done without any reduction for or consideration of any grant funding being received, either federal or state. So when they sized these loans, it was based on all of your payroll, and you got 2.5 times of all of your payroll. Well, we know you can't double dip. So if you're getting reimbursed for employees' time and salaries from either federal or state grants, you need to reduce that when you're asking for PPP forgiveness. So agencies may be in a situation where they end up not getting full forgiveness on the PPP loan. The good news is, if there is good news, it's a very low interest rate. So if you had to service the debt, you could, hopefully potentially do that with your cash flow.
That's great. A quick follow-up question from Steve. It looks like he's asking, so at the end of that 60-day max, you can recognize?
It really depends. I mean, that's a great question. We said until such time as it becomes known, or right, that you have the forgiveness. Again, our understanding is that the banks have the ultimate obligation or responsibility for determining the forgiveness, since they are required to service whatever loan amount is not forgiven. I guess it depends on what documentation, if any, you get from the bank. I think we'll see some more clarity coming out from that. So I'm going to say at this point, I think we don't know whether that meets the criteria to say that that's forgiveness has been received.
Got it. Thank you. Question from Amy. You're really in the hot seat, Michele. You're doing great.
I know.
Rapid fire questions coming
right.
up. Question from Amy. Can you clarify your statement on employee donations to retirement? How is this not part of their gross wages if it is deducted from their gross wages? So
because we're including it, it is in their gross wages. And if we're looking at payroll, it's part of payroll. But you can't add it on as non-payroll, or you can't add it on. I use the word non-payroll, and that's probably not appropriate because I don't want to confuse that with the interest, mortgage, and rent. So what we're saying is we do have gross payroll, which includes the employees' contributions to their retirement on their side. What we're looking at is gross payroll. What we're saying is on the retirement benefits that you'd also add to that, it's only the employer's portion of the retirement benefits. In other words, we don't want to add a second time, add those costs for the employee because they're already in the gross payroll.
Right. Another example of almost like double dipping.
Right.
You can't count it twice.
Can't count it twice, right.
So a question from Elizabeth. If you didn't include the rent in your initial application documentation, can you include it in your forgiveness application?
Well, yes. Well, it wouldn't have been included in your original application because the original application was based only on payroll.
Right.
It didn't include non-payroll costs, so that should not be an issue.
Okay. Another question from Amy. Based on your comment about EIDL coming off of the forgiveness amount of the PPP, does this mean the EIDL amount is never forgiven?
That is correct. Well, I shouldn't say that. So the advance is forgivable. Whatever that advance was, up to $10,000, is a forgivable advance. Whatever the remaining amount of the idle loan is that was received is not something that is subject to forgiveness. That is a loan that needs to be serviced.
Okay. And then it looks like a final question here from Katie. What kind of documentation do we need to submit to demonstrate that we, the employer, were unable to rehire an employee due to voluntary reduction of hours?
Yeah, great question. And due to reduction of hours? So in other words, we reduce somebody's
voluntary reduction of hours.
Oh, okay. Okay. So the employee voluntarily reduced their hours. Yeah. So I think you'd need to have some kind of documentation, written documentation to show that. And whether it's a letter that you have them sign off of, it could be, that's probably the best thing, is to just get a letter from them. They may have already put something in writing to you. Maybe they sent an email that said, hey, I need to reduce my hours because I'm watching, I've got to take care of my kids because they're out of school or what have you. So I think anything along those lines at this point, it seems, should be sufficient.
Great. Thank you so much. That was rapid fire, and I'm very impressed. Well, on that note, so we wrap up on time. I just wanted to express my thanks and gratitude on behalf of all the participants in the center to you, Michele, for spending time with us this morning. It was really insightful, and we appreciate you being with us. I will go ahead and just add a link in here for our member benefits. Thanks to those of you who joined us today who are members. We're delighted to have you with us. If you're not a member and you're interested, please click on that link and learn more about member benefits. It's a great way for you to get access to education and connection to other nonprofits, especially during this time. In addition to our advocacy efforts on behalf of the sector, we'd be delighted to bring you on board. I did want to mention 2 upcoming trainings that we're really excited about. They're new offerings. The first is an EDI roundtable for nonprofit executives. And this is going to equip our leaders with some practical strategies for dismantling racism and closing that leadership gap that we see, racial leadership gap, that was identified by the Building Movement Project Race to Lead series. Those will start, it's 5 sessions. They'll start up on August 6th on a monthly basis every first Thursday. And it's a great opportunity for, I see it as an essential opportunity for our nonprofit executives to really tackle this issue together and to walk away with some really practical strategies. And then the next offering that is coming up that we're really excited about, born out of our principles and practices for nonprofits, is our Nonprofit Management Institute. And this is really both of these programs are virtual. This is an interactive learning cohort. It's designed for nonprofit managers to build organizational capacity and also to help them achieve sustainability. So these sessions will kick off on 5 consecutive Tuesdays beginning on September 15th. And there'll be 90-minute sessions. We're building those out. So we're hoping that you all can join us for those, and you can learn more on our website, actually, under events, if you click on the events tab. But I did want to share those 2 with you, and please go ahead and take time, if you have it, to go ahead and complete that short survey. We'll go ahead and send out a wraparound email to all of you. It'll include the link to the recording and the presentation, and we'd be delighted to hear from you about how you thought this webinar was, and we look forward to seeing you at a future learning opportunity. I hope you all will take care, and thanks again to Michele for joining us. It was great to see you, and we really appreciate all of your expertise.
Great, thank you so much. Have a great day.
Yeah, you too, take care.